What does a mortgage broker do? Let me ask you a question. Do you think it would be a good idea to climb Everest solo? Your answer should be no. It's just too dangerous. You don't know the route, how to read the weather, how to spot the risks. Doing personal finance on your own is kind of like climbing a big mountain solo. In this video, I'll explain what a mortgage broker does and why you should use a mortgage broker. In fact, stick around till the end because I'm going to reveal a massive secret that good mortgage brokers implement in their businesses which puts their clients ahead by years. What would you do if you went to your bank for a home loan and got declined? The reality is that some would do nothing, some will go to another bank, and some will decide to use a mortgage broker. The reason I started here is because I get people come to me as a mortgage broker in the same position all the time. I chat with the clients, I run an assessment on them, which is based off how the lenders will assess them, and I use my expertise and experience to recommend lenders that will approve the loan. It's very simple, but if you choose option 2, which is to apply at another bank, you might just get another decline. At this point, you now have a hidden risk, and if you just keep applying for loans and getting declines, it keeps getting worse. What happens is that every application will affect your credit score, and the more applications that get made, the more your credit score may drop. Let's say you've been getting declined and you're now at lender number 4. They might just decline you because your credit score is now too low. However, a mortgage broker may have suggested this lender as their first choice and had the loan approved. This is one reason why you should use a mortgage broker. At this point, I want to shut down a mortgage broker myth. The biggest mortgage broker myth is that a mortgage broker will help you get the cheapest rate. If that were true, people would just use Google and the whole mortgage broking industry would cease to exist. Why is it a myth? After 13 years of running my own mortgage brokerage and doing hundreds of millions of dollars of home loans, I feel like I've got a good understanding of what's important. There are 3 core things. Number 1, getting approved. At the end of the day, people are borrowing money for a purpose and they want to achieve that. For example, if you're buying your first home, you naturally want the loan to be approved. You don't want to pick a cheap lender and have them decline the loan at the last minute and put your dream home in jeopardy. Number 2, have realistic expectations. It's a complex process and borrowers can often feel stressed because they have no idea of what's going on and have no control over the process. A good mortgage broker will help guide you here. Number 3, they feel supported the whole way through. A good mortgage broker will consult on how to do things like put in an offer that protects you rather than the vendor. They'll also be available to answer any questions you have in the process. By using a mortgage broker, you'll get supported the whole way through. Now I'm going to reveal a secret that good mortgage brokers use with their clients. Okay, so we've got a client here who they've got a $500,000 mortgage, their interest rate is 6.7, they've got 27 years left on their loan. I know in the market right now I can save them 6.3%. Obviously there's other fees and stuff involved, but I'm just going to use this basic example. What's important here is that the monthly repayment is $3,341, and if we go to 6.3, which is basically what I can get these clients at the moment, I could actually probably get less, but I'm just using an average, kind of what's reasonable among lenders. So we've saved $127 a month. No massive number, but what I want to demonstrate to you is that little things are important and they can become big things. What's that saying? From little things, big things grow. So this is where it gets really interesting. So let's go to the extra repayments calculator. There's a couple of little techniques I'm mixing in here, but I'm just going to keep it nice and simple for you. Here's a loan, 6.3%, 27 years remaining. So this is what I'd refinance you to, but the monthly payments, you'll notice, are a little bit lower. They've reduced. So what we want to do is just ensure that we're paying the same amount. And one other little trick, I want to do a fortnightly repayment. The reason why I want to do a fortnightly repayment is because we're basically in an average month is something like 2.15 fortnights. So all we're doing is paying a little bit extra by dividing the monthly payment by 2. So it should be 3314, yeah? So if we divide 3314 by 2, every fortnight we want to be paying 1657. Now, The lender wants to keep you in debt for the most amount of time, so they're going to give you the minimum, which is now 1482.69 per month. So if I just round that off and go 1483, it means you've got additional repayments of $174. So here's the results. You've paid off your loan 6 years and 2 fortnights early, and you've saved $141,000 in interest. I'm not going to get too technical on this, guys. The point is that having good people on your side will put you miles in front. That's why climbing solo is a bad idea and why you use Sherpas to get you up that mountain. If you need a good Sherpa, the team here at Wilbell Mortgage Broker is here to do the heavy lifting, so get in contact with us today if you need any help with a home loan.